hear me? I hope the audio. I think the audio should be back now. I'm waiting for confirmation. Good. All right. So, good morning. Let's do this again. It's May 16th, the day after we got a soft or light CPI print that helped markets run into all-time highs. We got an all-time high on the S&P yesterday into the in towards the close of the session. The prior all-time high was 53.33, like 50 on the SPOs on the futures. On Nasdaq was 709 area. Nasdaq didn't print a new all-time high yesterday during the session, but on the overnight we traded up to the 740. So new all-time highs on the overnight as well on the S&P. 53, like 43 area, I believe, before we saw this slight little pull down. Now, the softer CPI data that came out yesterday was well received, to say the least, in the markets, right? Rampant buying above these highs and continuation throughout the entirety of the day. So a lot of data-centric traders celebrated in style after after April's consumer price index increased by 0.3% in March, easing from the 0.4% in the previous 3 months. And that print meant that inflation is still running well above the 3% level on an annualized basis. Again, this caused the S&P, the SPX, to run over 5,300 for the first time ever. The futures, slightly different numbers there. And retail sales did come in flat, while regional business activity cooled further, suggesting that the Fed could potentially ease monetary policy sooner than expected. So let me just see Fed Watch futures, right? That's our gauge to help us get a decent understanding of where the Fed's head is at in terms of the rates and the rate decision. So we have June 12th, which is in about a month's time. There's still a 91% probability that we're going to see the rates stay as is, down a bit from yesterday. In July, right, expectations are mainly to keep rates as is. Still, even after that CPI data, maybe once we get that next CPI report, we'll see things change a bit. And then by September, there's a decent percent chance of one rate cut to come by then. So, these recent all-time highs, this rally from the lows that we saw late April, realistically, it's pressing us into a very strong bull momentum move where seeing larger drops and pull downs is most likely not going to be a real factor this year, right? 5 to 8% pullbacks, if that, right? 3 to 8, around 5, I would say, is the continuation. Now that we're into a new all-time high, what happens in these areas is that there's a lot of buy pressure that's been pretty much pent up by momentum traders. So we could continue a decent bit. I expect to see a stalling maybe into these areas, but again, right, more so on a bullish front with some like stalling and then continuation to the upside, as we've seen over the last two to 3 weeks, where we ramp up into a new distribution balance. We've stall, rally up, stall, rally up, stall, rally up, which presents a decent range to trade. Now, volume is it's back to fairly low after yesterday's CPI boost, right? We have 141,000 contracts traded on the S&P. Probably get towards 200,000 before the open, which is still kind of like eh. And then in some of the other news, right, we're still waiting for some of the retail earnings to come out, but it is 13F season, right, where hedge funds with at least $100 million in assets under management reveal their holdings. The flurry of filings sheds light on what they bought and sold during the quarter, but investment managers can also make special requests to regulators to keep some of their stakes confidential. So insurance-focused Berkshire Hathaway just revealed one of those positions disclosed a prior $6.7 billion stake in Chubb CB, with market participants setting the stock up 8% after hours on Wednesday, as some look to copy the successful picks of Warren Buffett. So other 13F filings include Pershing Square from Bill Ackman, Scion from Michael Burry, right, and a bunch of others that you can go and check out to get a good insight of what these big money funds are doing. Now, some of the main news, right? We're talking about China and Russia here. Putin landed in Beijing for a 2-day state visit, where he was greeted by Chinese leader Xi Jinping with a red carpet welcome and a full military ban. So the trip will build on the commitment to the no limits relationship they signed at the Winter Olympics in 2022, just before the full-scale invasion of Ukraine. As Russia becomes isolated from the West on the world stage, it sought to boost trade in the East elsewhere, helping prop up its economy in the face of sanctions. So the relations between Russia and China are not optimistic and not directed against anyone. This is what Putin said. Opportunistic. Our cooperation in international matters is one of stabilizing factors in the international arena. Xi said in the sentiment as well, adding that China will work together to achieve the development and rejuvenation of our respective countries and to uphold equity and justice in the world. So trade between the two nations has soared to a record level, right, rising 26% last year to $240 billion and hitting targets ahead of schedule. So Russia has even overtaken Saudi Arabia as China's main oil supplier, while the latter sends back key commodities, vehicles, and other consumer goods. Trade has also seen Russia's economy top expectations to expand by 3.6% in 2023, according to the IMF, despite Western efforts aimed at draining the Kremlin's war coffers. So Wall Street and Wall Street Breakfast ran a survey last November and again this week on how the U.S. should manage its economic relationship with China. And the biggest changes over the past 6 months showed that many subscribers have less faith in reapproachment and trade deals, 24 to 15%, while a greater number believe that decoupling the sanctions are the way to go, 11 to 19%. Now remember, we saw that those tariff increases was it last week? I can't remember exactly when, but especially on EV, that made a big, reaction the EV tariffs, right, were something that was taken as like the biggest move, right? Over 100%, right, from 25% on Chinese EVs into the U.S. Interesting factor there. So today we've got a few Fed speakers at 10 a.m. Fed's Barr and Fed's Barkin, and then at the end towards the afternoon also in the morning 10:30 we have Fed's Harker. 12 we have Mester Bostic at 3:50, and then the Fed's balance sheet to wrap things up. So as it stands, right, markets are still diddling around these all-time highs. And the S&P 500 futures, I've got these trade plans here. You can see them on the ES at the top, NASDAQ at the top here. Generally, what I'm looking for is the structural continuation to the upside, but that could result in some kind of larger pullbacks realistically. I wouldn't be opposed to seeing ES into 53.20 or 53.04 area, right? That's fine for me, seeing if buyers step in there. I don't want to get too aggressive on the sell. Yesterday was a very strong rally. Fading into trend moves like this and all-time highs can be detrimental. NASDAQ as well, like 670, 660 area. I want to see if that first buyer steps in. Otherwise, we're going to complete the auction and trade down to that 600, 610 where they accumulated a lot of buying. Only then, when we get those structural shifts, is it, I guess, safe, right, if you will, or higher probability to look for those turning points and fades on the sell side. So, Ian, how you doing? So I hope everyone is prepared, right, after yesterday's run up. Play it level by level, right? Let the order flow dictate who's strong and who's weak, and understand where the auctions are. That's what we're going to be doing when we open up this live trading room, and I'll see you all in there. We'll do this again to wrap up tomorrow, we'll wrap up the week tomorrow with our live stream. So join us there. We'll see if we can get Vanta back on, and I hope everyone has a great trading day. Check out community.tradeproacademy.com, and I'll see you guys in our